This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on a Monday afternoon. I am Cesar Delgado. I am your host of today's program. We were talking about what's impact on the trade deficit for farmers in the Midwest. I am joining about it with Patrick Stoff from the University of Missouri. Then we were talking about the highest prices for right now with the cattle markets for today. And the commodities markets with Tyler Shau from agmarkets.net. Well, we are in the Easter season in central Illinois. It's called from less expensive for the meat with inflation and CP. The beef demand for this month is getting higher than the average price. However, the markets are down during the tariffs for right now with the trade deficit for right now with the inputs cost. We will see for next couple weeks. Otherwise, this is your rural news sponsored by AgriGold. The World Supply and Demand Report on Thursday from the Department of Agriculture was unchanged to the numbers. However, corn demand is up at 3%, and the beans numbers are down at 2% from the report from Thursday. The weather has been good to be planting this week in the Midwest. On Saturday is going to be in 70 with sunshine in central Illinois. However, there are a few of flooding in Kentucky. Finally, the down next week will be the cattle on feeds report from the Department of Agriculture on Monday because of the Easter week. That's your rural news on Back Roads of Illinois. This time, take a look for the commodities markets for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. May corn is down at 3 to 6 cents. July corn is down at 5 to 9 cents. May beans are down at 5 to 10 cents. July beans are down at 4 to 8 cents. Kansas City wheat is lower for today. KC May wheat is down at 8 to 10 cents. KC July wheat is down at 3 to 6 cents. Chicago May wheat is down at 3 to 5 cents. Chicago July wheat is down at 8 to 6 cents. Let's see all of the livestock markets. June cattle is up at 5 to 10 cents. August cattle is up at 3 to 4 cents. May feeder cattle is up at 5 to 10 cents. July feeder is up at 9 to 6 cents. June hogs is up at 3 to 6 cents. August hogs is up at 4 to 6 cents. This has been your commodities markets update for this afternoon. We were talking about what's impact on the trade deficit for farmers in the Midwest. I am joining about it with Patrick Stoff from the University of Missouri. Welcome to the show, Patrick. How are you doing?
Thank you very much for the opportunity. I'm doing well this morning.
Okay. Start off with our conversation about the trade deficit. It would be considered impact on the agricultural and ag-American products. What is your thoughts on this, Patrick?
Yeah, we do have a trade deficit overall in U.S. Economy, and we also have a trade deficit in agricultural and food products. The deficit in agriculture and food products is a story of very different worlds. On the one hand, we have a big surplus in major commodities like wheat, corn, soybeans, cotton, pork, and many other products. But we have a deficit in things like fruits, vegetables, and many processed products. So again, those have impacts on different parts of U.S. agriculture, and trying to address that deficit is a high priority of the current administration.
Do you have any concerns about these trade barriers for next couple months?
There's been a lot of swings in the market the last few weeks and even last few days, for that matter, based on various tariff announcements and other reactions of other countries. We've seen some concerns about the ability of the U.S. to export major commodities like soybeans to China and many other markets as well that really had a big impact on the market. As how countries respond to that situation will have a lot to do with how we go forward. If there are retaliatory tariffs put in place by other countries, that's obviously a very negative thing for U.S. agriculture. If, on the other hand, there were to be eventually some trade agreements that might open some new markets, that could be more positive.
Patrick, how concerned about it with you? Us. Beans to China for their pork industry?
Sure. With the current tariffs that are put in place by China over 125%, that makes it almost impossible for the U.S. to sell soybeans to China. That market will be dominated even more than it already is by Brazil and a couple of other major players outside of the U.S. So then the question becomes whether we're able to pick up enough markets elsewhere in the world to offset the loss of the Chinese market. A lot of people are hoping that the current very high levels of tariffs will not persist, that there'll be some sort of agreement that will at least bring those tariff levels down, if not eliminate them entirely.
Why, our beans are pretty important to China.
Yes, our beans are very important to China. China has been the number one importer of U.S. soybeans over the years, but our trade share in China has been diminishing as Brazil's has increased. So to a large extent, China will be able to replace U.S. soybeans with those from other parts of the world.
What are watching for the planting season with the lower grains markets for right now?
Yeah, we're watching how market prices evolve in the next few weeks, and of course how the weather evolves as well. The planting intentions report from USDA indicated a big increase in corn acreage this year, a significant drop in soybean acreage. The price movements of recent weeks, if nothing else, would probably tend to strengthen the indication of an increase in corn at the expense of soybeans. So how the last few weeks of the pre-planting season evolve, and of course how the weather's like this spring, that allows people to get in the field to plant the crops they want to plant, will be hugely important. I don't expect a lot of land just to go unplanted, but I do expect to see some last minute swings at the margins that could prove to be very important.
What is your thoughts on the balance sheet on May 12th?
I thought what we've seen so far is an outlook of having large supplies of corn in 2025. If weather allows that to happen, that will make it tough for corn prices to recover to the extent that people want them to recover. On the soybean side, we'll have less acreage. We're going to have less demand as well, and so that probably will make it also tough for soybean prices to increase very much. Everyone will be watching to see how the trade situation evolves over the next few days, next few weeks, and what that might imply for USDA's own projections of trade and prices for the crops harvested this year.
Do you follow the livestock markets on this move in the feeder cattle?
Yeah, the feeder cattle story has been very interesting recently. We do have fewer cattle out there, which has caused reduced supplies of beef and helped strengthen beef prices. When some of the early tariff announcements were made, we saw a sharp negative reaction to the feeder cattle market, as there was a lot of concern about potential retaliation by major beef importers. With the reduction of the tariffs that were put in place initially, that seems to help assuage at least some of those concerns. And we saw feeder cattle markets recover pretty strongly late last week and seem to be starting the week of April 14th off in a reasonably good shape as well.
Do you consider that we are going to be in recession?
I think there's certainly a possibility of recession. When business economists are surveyed, the proportion of business economists think that a recession is likely or at least possible has definitely increased in recent weeks because of the trade frictions. We still don't have a majority of economists expecting a recession, but certainly a slower growth is widely expected by many people. The current level of uncertainty has probably stymied business investment in the short run, and just has generally made consumers very wary of the current situation. And when consumers are not confident about the current market situation, they tend to pull back on their purchases, which tends to have a negative effect on the economy. For myself, I don't pretend to know what's going to happen for sure here, but I do think at least slower growth is very likely for 2025.
Do you have any final thoughts on the corn acreage and the soybean acreage in the Midwest?
Yeah, I think again that where prices go the next couple of weeks will be important, and more importantly, where the weather goes the next few weeks will be important. Pretty much every year, it's largely a function of whether people can get in the fields early enough to plant the crop they want to plant. We'll often see shifts of acres from one crop to the other if there's any delays in planting or if there's widespread problems that make it tough to get in the fields.
How is the weather in central Missouri?
We've had reasonable amounts of rain here, and actually things look pretty green. I was just made a trip to Iowa this past weekend and noted that as we kind of crossed the border into Iowa, things started to look a bit drier. Here in Missouri, though, we seem to be in pretty good shape right now, at least in central Missouri.
Well, thanks, Patrick.
Thank you very much for the opportunity today.
We've been talking with Patrick Stoff from the University of Missouri, one back roads of Illinois. I'm going with Tyler Shau from agmarkets.net on a Monday afternoon. How are things in North Dakota?
Things are good. We had a good weekend. We got a little bit of rain, anywhere from a half to 3/4 of an inch. Very much needed rainfall. So parked planters for a few days here and let guys kind of get stuff caught up. And I'm guessing as we hit later, another day or two, weather's going to be 70 degrees again. You'll see some air seeders rolling. We'll be getting spring wheat in the ground pretty heavily here over the next week or two.
Tyler, what is your thoughts with the world supply and demand report on last week report?
The big story was the change in corn, dropping the ending stocks down below 1.5 billion bushel carryout, about a 1.465 carryout now. The USDA did come in and raise exports, and probably going to need to raise them again. Looks like we continue to ship at a torrent pace. We got export inspections here today, very, very strong, which is a good thing. Tells us that the buyers that have shown up on these sales are indeed taking deliveries. We're not seeing the cancellations a lot of people worried we might see after some of the tariff talk hit. So the thing it sets us up for, we've got big acres obviously coming in for next year right now, but we have any type of a yield hit when we get that new crop balance sheet in the coming months, and you're going to see that carry out start to dwindle again. And just kind of as a quick reminder, there was a time about a year ago as we got that first look at the 24-25 crop in the May timeframe, June, July, where we were thinking we were probably going to see a 2 billion bushel carryout. Now you've got, first glance at the 25-26, the new crop balance sheet, you've got 95 million acres. So a lot of acres of corn going in. And even if you plug in the 181 yield that the USDA used in their ag outlook for them, you're still just at a 2 billion bushel carryout. So going to be tough with that many acres to see a 181 yield. A lot of those acres are coming in fringe areas. So we see it as a friendly report on the corn side. Beans, they didn't change much. Little bit of a reduction, like a 5 million bushel reduction in ending stocks. Not enough of a change to really do much. The key there is when you start looking at that new crop balance sheet again, you're looking at very low acres because so many acres are going to corn. And if we have any type of a weather hiccup or poor yielding crop, and now you've got very, very tight ending stocks domestically, and that could be a story to really light a fire under November beans. And wheat just wheat did what it usually does and creates a little disappointment. Saw ending stocks creep up. So just again, we're getting too much wheat here in the U.S. and probably need fewer acres or need to see some reduction in yield.
What is your position on the balance sheet on May 12th, Tyler? Let's talk about it for this afternoon.
For the May 12th WASDE, they're going to come in and they're going to use the acres that we got from the prospective plantings report at the end of March there. So 95.3 million acres on corn. They're going to use 83.5 million acres on soybeans, and they're going to use 45.4 million acres on all wheat. I kind of talked about it already, but they're most likely going to use the 181 yield that they were using at the February Outlook Forum. Again, that's probably pretty high when you look at 95 million acres put in the ground, especially when a lot of those acres are coming from the Western Corn Belt, where we're not always known to have extremely high yielding crops. So wouldn't be surprised to see that drop a little bit as we move forward, or at least we're going to have really, really good weather to see that kind of a yield take shape. So I would guess if you made me take a bet right now, I'd take the under on that as we move forward. And we're probably closer to that 176, 177 area, which isn't necessarily bullish, but it's somewhat friendly to new crop corn prices. Soybeans, again, we're set up to have very low ending stocks. Even if we have a good crop, USDA is going to say 83.5, probably about a 51.5 bushel yield, which just using current demand puts us like a 240 ending stock. So, or excuse me, a 275 ending stock. So if we have any type of yield hiccup, that's going to lower that on new crop, and we're going to need to see a really good yield. Granted, we've got high ending stocks in the world market, but in the domestic market, we're going to be tight stocks, which means you'll probably see an increase in imports and a decrease in exports to kind of help true that up. And wheat, again, the bright side there, you got world ending stocks and wheat kind of declining. And that could create an opportunity for the U.S. to start maybe exporting some wheat, especially with the crash that we've seen in the dollar here over the last couple of weeks, putting in multi-year lows right at the moment as we speak.
Of course, like in football, term for betting.
Yep.
Do you have any concerns about these trade barriers for American ag products like our soybean?
Well, there's definitely concern. Anytime you come in and create new barriers I mean, it's not really our barriers. It's when the countries retaliate and slap tariffs on our products and make it more expensive. But at the end of the day, that doesn't mean you've squashed demand at all. You will kill a little bit of demand because you're raising prices, and higher price usually leads to lower demand, especially in a commodity product like soybeans, corn, or wheat. The net result, though, is there's still the same amount of soybeans out there that there was before, just we artificially price some a little bit higher. So I'm a little concerned, but at the end of the day, I've made this comment multiple times over the last several years. Number one, it's the elephant in the room when it comes to soybeans is Brazil. Not necessarily if people are wanting to buy our beans or what we produce. It's just they've pulled so many acres into production that it's really flooding the market with supply. And then two, China has helped with that and the fact that they've been actively investing into South America since the first trade war started under Trump way back in 2018. So we're starting to see some of the fruits of their labors over the last 6 years come into effect where, they're really not even on the books to buy any of our soybeans this year. So I think that's one of the reasons you've seen soybeans rally so aggressively over the last 4 or 5 trading days. There's a lot of concerns. There's probably a lot of algorithms that had built in uh, trades based off a headline risk on tariffs and counter and retaliatory tariffs, and the market's starting to realize, hey, China wasn't buying any of our beans anyways. So the fact that they're retaliating against our tariffs and focusing in on soybeans really didn't have that much of an effect. And market kind of found out it wasn't going to go much lower than 980 or 970 at least last week, and we've seen this push higher. So yes, I do have concerns, but I think the market's a little more resilient than maybe we've given it credit for.
What happened with China for last week? Because it is confusing.
It is very confusing. They raised their tariffs to kind of counter our tariffs. Trump came in middle of late last week and raised the tariffs on China again, and then gave a 90-day reprieve on all other countries. Um, then over the weekend, we did hear that they were going to kind of give a reprieve against some technological, the iPhones and semiconductors and stuff like that. Sounds like that's in a temporary in effect, but also sounds like they maybe don't necessarily want it to be in effect. So
Remember our audience. The livestock markets are tied with the stocks markets.
yeah, they are. They tend to follow that. You do got to be careful. Like just because history says there's correlation, and there is, don't get me wrong, that doesn't mean it's got to follow. And for instance, we've seen the equity markets, put in highs there in late January, early February, and we've seen a pretty significant break, upwards of 10% at one point, almost 15% break in the equity market values. All the while cattle really didn't budge at all. So we've seen them soften over the last few months while cattle remain strong and actually push to new highs. So again, I'm not saying that correlation doesn't exist. It clearly does. But I will say, the one thing as a former micro and macro economist is the stock market is not necessarily the economy. It's a gauge we use, but it is not the economy. You got to look closer at stuff. GDP, GNP, the labor force participation, unemployment, and those have stayed pretty strong from a macro perspective, which just tells us the consumers out there, they're buying beef, they're not backing off.
Tyler, what is your final thoughts on the corn markets for right now?
Final thoughts on the corn market. Um, I wouldn't be surprised to see maybe a little bit of a setback here. We saw May and July come down about a nickel today. Some of your March highs are going to come in right around the same spot as our 50-day moving average in that 483 and 3/4 on the July contract. I wouldn't be surprised. We don't see a little bit of a setback here, maybe another dime off of that thing. But long and short of it, we got a sub 1.5 billion bushel carryout. Exports have been humming along. If you look at ending stocks to use from a world global exporter, where you're just looking at the U.S., Brazil, the Black Sea region, we're in incredibly tight stocks. They've got incredibly tight stocks in Brazil. So we feel like there's some room to continue moving higher on corn. It generally doesn't just go in one direction forever. You're going to see some ebbs and flows. So I wouldn't be surprised we see a little bit of a dip back lower before maybe making that leg higher on some spring weather issues. And then on December corn, on your new crop, we've been talking about this quite a bit, but our friends at JSA did a study and said that every year for the last 20 years, 20 out of 20 years, at some point from March 1st to the end of the December contract, that December corn has eclipsed or gotten at least equal to the spring average, the February average price for insurance purposes, and that was at 470 on these corn. So we've been pretty adamant on waiting until we hit 470 on December corn to start getting active on loading up on protection for our new crop again. We had some on, we got out of it, kind of been maneuvering around, but that's kind of what we're looking for.
How about the beans markets as well?
Same thing, a little bit friendly beans here, and then same holds true for the February average price on November beans. We've always gotten back to the February average. This year, that's at 1054 on November beans. So we're kind of holding patient here. There's a little bit of concern of whether or not that means we're going to have to get above that 200 day. So if we can eclipse that, then it's we want to make sure we're ready to put some coverage on when we get to the 250 or excuse me 1050, 1060 level.
Thanks, Tyler.
You bet. Take care.
Thanks to Patrick Stuff from the University of Missouri and Tyler Shau from agmarkets.net. This has been Back Roads of Illinois. I'm Cesar Delgado. You have a good day.